guys, Omar Khan here from Theta Trading, and today we're going to be talking about inflation. How bad is it, and what does it mean for us as real estate investors, as stock investors? What's going on? What's happening here, right? All right, so the CPI data just came out. CPI is the Consumer Price Index, and why is that even important? Well, the reason that's important is this. Consumer Price Index means what is the consumer, us, which accounts for 70% of gross domestic product, what are we paying for goods and services? So CPI, Consumer Price Index, a basket of goods and services. What are we paying to buy that basket of goods and services? So what's been really destroying the economy, the housing market, the real estate market, the stock market, has been inflation. Inflation is out of control as far as the banks around the world are concerned. And why is that even a problem? Well, that's a problem because inflation means more inflation, right? So if you have the cost of goods and services rising, well, the person that works for you is going to ask for more money because, hey, I can't afford that anymore. What do I do? How do I pay for this thing? So the cost of goods and services, it could become a never-ending spiral. And that is very bad for the economy. Very bad for the economy. So what the Federal Reserve in the United States, the Bank of Canada, and other banks around the world are doing is this. They're saying, well, hey, inflation is really high. All right, how do we combat inflation? Well, we have to kill the economy to do that. We have to make sure people have no money or less money to spend, because if they have less money to spend, well, the cost of goods and services won't go up as fast. All right, so what do? They start hiking interest rates over and over and over again. That's what's been happening. So the Bank of Canada, the Federal Reserve, they're hiking interest rates because they know that things are not very good on the inflation front right now. And as a result of that, they could kill the economy here, right? If you raise interest rates so high, all of a sudden, think of whoever you are, you got a mortgage in your house, and let's say it's a variable rate mortgage, all of a sudden now you got to pay a lot more on your mortgage than you did before. And on top of that, grocery prices have gone up, gas prices have gone up. Are you going to be consuming as much? Are you going to buy that new iPhone? Are you going to go and shop around in town and buy dinner for your family? Maybe not. You're going to say, you know what? Why don't we stay home tonight and have KFC? Right? It becomes one of those things. Because you cannot afford to keep spending the way you were because things cost so much more. Okay? So what happened during the pandemic is the governments around the world, because we were in such a bad economic situation, they printed a lot of money, right? And the definition of inflation is too much money chasing too little goods and services. And that's exactly what happened. Now, what has been happening? Well, what's been happening is that you have had a lot of inflation, but you have not really had deflation yet. We don't know. So I'm recording this as of October the 13th, and CPI data just came out this morning, and that's what I wanted to talk to you guys about today. CPI data, Consumer Price Index data. It was not the prettiest. It could have been better, right? And the stock market is looking for a little bit of good news, okay? So stock market is a leading indicator. It's pricing in today what it thinks is going to happen 6, 12, maybe even 18 months out, okay? But let's call it 12 months for the sake of argument. It's pricing in today what it thinks will happen in 12 months. Well, when inflation comes out pretty hot like it does today, like it did, and I'm going to get into this, I'm going to share my screen here and get into it here. The stock market says, we don't know if the federal bank is going to raise interest rates even further. We know they're going to raise 75 basis points and probably another 50 before the end of the year. But we don't know if they're going to raise even more than that. They might. Because why? It doesn't look like inflation is coming down. So the first job of the federal bank, the Federal Reserve, is to combat inflation. That is that's one of their two mandates, to combat inflation. That has not been the case so far. It has been very difficult for them to combat inflation. So we have not seen good inflationary data. Now, what does this mean for our stock portfolios, our real estate portfolios? We're going to take a look here. Inflation increased 0.4% in September, more than expected despite rate hikes. So again, you're raising interest rates so that people have less money to spend, so they become poorer, so they can spend less. And if they can spend less, well, that's good because there's not as much inflation anymore. But that's also bad because, hey, companies are going to make as much money. It's not good for the stock market. The stock market's already priced a lot of that in. Now, this is terrible. Consumer prices rose 0.4% in September, and we're up 8.2% from a year ago. That's not the best of signs, right? And what the federal bank wants to see is that people are starting to get hurt in the economy. Therefore, they are spending less money. Therefore, inflation starts going down. So again, the stock market being a leading indicator, as soon as the markets opened up today, it was terrible. Off the bat, the Nasdaq was down 3%. However, it's reversed course. Now, we don't know if it's going to go down further in the year and the days ahead and the weeks ahead, but we do know this much. Inflation is a problem that has not been resolved yet. And the stock market hates uncertainty. Until it is resolved, this will keep happening. Okay? Until there's a resolution one way or the other, say, okay, you know what? We really got inflation under control, or we do not have inflation under control. And we got to raise rates more. Now, if we have to raise rates even more because inflation is not under control, well, guess what happens? The stock market will take a further beating because the stock market is looking at what do I anticipate will happen in the future. If I think rates are going to be 4.25% and now all of a sudden they're going to be 5%, I didn't price that in. Got to take care of that. And that's what the stock market is doing. Now, the real estate market is a lagging indicator. So I live here in Toronto, Ontario, Canada. And real estate in Toronto has been bananas the last few years. Absolutely bananas. It's gone through the roof. And a lot of that has to do with the amount of people moving to Southern Ontario. We don't have enough housing supplies. So, and I made my money off real estate and stocks. So for me, I look at the real estate market and I say, well, what exactly is happening in the real estate market right now? Well, the real estate market right now, a lot of people in periods of time of euphoria, right? Warren Buffett said it best. When others are greedy, be fearful, and when others are fearful, be greedy. In the real estate sector, people have been greedy for a very long time. That has led to excess speculation. That has led to excess, perhaps, mortgage fraud, right? People trying to get loans that they should not be qualifying for because of falsified documents. And this has been very prevalent, okay? Now, that could lead to a further collapse in the real estate sector. So in the real estate sector, peak to trough, where I live here in the greater Toronto area, I've been seeing a drop in depending on what area of Toronto that you live in, and I'm counting the greater Toronto area, between 33% and like 18%. That's a substantial decline. And the reason that decline has occurred is because of this. Interest rates. They are persistently high. So again, the Bank of Canada, the Federal Reserve, has to increase interest rates in order to make us poor. The poorer they make us, the less money that we can spend, and therefore the less inflation occurs. And that is exactly what they're trying to do. So let's just dive into this inflation report, okay? So inflation report here, you can see prices increased 0.4% for the month. That's annualized 4.8%. But the expectation was 0.3%, okay? So we're off of our all-time high of 9%, but we're still at 8.2% year over year. That's a lot of inflation, and the stock market is not like that at all. Why isn't it like that? Because the cost of borrowing for companies in order to grow their businesses become that much more expensive. And if the consumer, us, are not consuming as much, those same companies will make less money. That's a double whammy for them. That's a bad spot, and the market pulls the value of these stocks down because it's saying, well, hey, you're not going to make as much money, and if you wanted to grow your business, it's going to cost you that much more money. I can't give you the same valuation that I gave you before. And that is how the stock market works. Short term, it is very much a popularity contest, but long run, it is a weighing machine based upon the earnings. So if we keep going down this path and we look at how much inflation has changed, so this is year over year, right? So we hopefully we hit a peak here in June of 9%. And we went down here, 8.5, 8.2, we're still at 8.2. Hopefully this trend continues downwards. Because that will signal to the Federal Reserve that, hey, you know what? We don't need to increase interest rates as much as we thought. In fact, maybe we need to decrease interest rates because the economy is in bad shape. The stock market will love that. However, the real estate market will take still some time to get adjusted to that. Why? Think of someone that you know, okay? They're closing on a house, and now the value of that house is far less than it was when they bought that house. Well, that's going to be a problem, and that takes some time to filter through the economy. And with rising interest rates, it becomes that much more difficult for people to afford these homes, right? So initially here, this inflation report, CPI data, rattled the markets. But markets eventually rebounded today. Now, this is a very short-term phenomenon. Who knows what's going to happen? All I'm saying is this, and this is why we invest the way we do. We invest in great companies using options. Why? Because for us, it works. The worst thing that's going to happen to us is that we own a stock we want to own for a lot less than we wanted to pay for it. Great. I would have done that anyways. Now, I know that makes no sense. If it doesn't make sense, go to our website, thetatradingco.com, and take a look at our book a call option. Book a call, and you'll see exactly what I'm talking about in terms of the strategy. The strategy is life-changing. It changed my life. Imagine getting paid a lot of money just to buy a stock you'd buy anyways, and then use that money to buy more real estate. And that's why we talk about stocks and real estate here, and you have to be informed of what's happening. But that is what is happening right now, guys. The stock market is in bad shape. It does not know what's going to happen inflation-wise. It does not know when inflation is going to be behind us. But when it does, remember, the stock market has always gone to an all-time high. Always, historically. Doesn't mean it'll happen this time. But historically, stock market has always gone to an all-time high. Now, the real estate market, that is something I'm a bit more concerned about because typically speaking, people have less equity in their homes than they do in their stock portfolios. A lot less, in fact. Meaning less loan-to-value ratio. All right. Well, if you have a less loan-to-value ratio, if you've put down 20% or 25% on your property in the last 6 months or a year, you may have been completely wiped out. Do you walk away from your property? If rates keep going up, I don't know. And that is what we're going to be watching. How many delinquencies? I was talking to a mortgage broker friend of mine over the weekend, and he said to me, the biggest problem I'm facing right now is lawsuits. People who are not able to close on the house that they bought. If you bought a house for $1 million, 6 months ago, and you're closing on it, let's say, and typical closings are 3 months. Let's say you bought a house even 3 months ago at $1.3 million. And now the bank is coming to you, say, hey, it's worth $1 million. You might not be able to close, right? Because you were not anticipating this steep of a decline this fast. This all leads to deflationary pressure, which the banks are trying to do, okay? So just to wrap this up, guys, I want to make this topic over today. The markets initially reacted very negatively to this news, the stock market, very negatively. However, the stock market has taken one hell of a beating this year. Absolute beating. I've been investing for 25 years. This is the third worst I've seen, and it is bad. Perhaps it's over with. Perhaps the market has bottomed. We don't know yet. But we're going to keep looking for this inflationary data, okay? So thank you guys for joining us today. Really appreciate it. If you like what we do here at Theta, hit us up at thetatradingco.com. Book a call. Hit that like button. Hit that subscribe button. And let us know what content you'd like to see in the future. Take care.